Hello, it's Connie from Prosperity Finance. I hope you're well. Now we are in November, almost December. It's time for another interest rate update. Now, a week ago, we all heard that big news, which is Reserve Bank keep the OCR unchanged at 1%. It really comes as a surprise to a lot of people and even to banks economists, because they all predict there will be a cut at this time, but it didn't happen. And the Reserve Bank, think, the current economy, it's okay. We're still going to monitor. It's not really need another cut. Now, once the announcement was made, we had a flood of phone calls coming in from clients and prospects and wondering, what the interest rate is going to be. Well, we told them probably if you want, wait for a few more days, because that normally how long it takes for the bank to react to Reserve Bank news. Now, the big news was on Monday last week, most of the banks start dropping their one-year rates. Now, at the moment, almost all the banks, Australian Bank and the Kiwi Bank, has kept their one-year rates at 3.39%. Now, a week ago, that was 3.55%. So that was a really big drop. That really surprised us because we thought, maybe the bank would drop a bit given this time of year, bank want to, do some campaign to gain some market share, but we never expect, such a big drop. So that was good news. A week ago, the 2 years rates was cheaper than the 1 year rates. And a lot of people, struggle, should I fix for 2 because it looks cheaper, but maybe 1 because I predict some cuts in the near future. But now the decision is easier because, 1 year rate is the cheapest. Now, the Chinese banks, there are 3 Chinese banks in New Zealand. Now, they still haven't made any changes to their rates. So a week ago, their rates was at 3.15%. Now it's the same. So the difference between Chinese banks and Australian banks was actually short. The difference is actually smaller. Say a week ago, Australian banks 1 year rates was around 3.55, and Chinese banks offer 3.15. So you can tell, that's 0.4% difference, but now was actually very small. Now, especially if you take into account Australian banks' cashback offer, because Chinese bank don't offer cashback, so probably work out the same. So, yeah, I don't know what, Chinese bank would, review their interest rate strategy, to keep the momentum. Okay, who knows, but I'll keep you up to date. Okay, so that's the current rates for 1 year. The 2 year rates is capped at 3.45 for most of the bank. Couple banks actually increased slightly to 3.55. Now 6 months, because some people ask for 6 months because they might think 6 months is better because then I can refix at lower rates sooner. But the 6 months rates is around 3.99, so it's actually quite a big difference from the 1 year rates. So a lot of people still, go with the 1 year rates. Now, if you are thinking about repaying your home loan, within the next 12 months, probably consider 6 months. Because, for example, if you are selling your home, fixed at 1 year, fixed term, and then you have to repay earlier, you have to pay break fee. Probably you're not saving anyway. And who should consider more than 1 year rates? Well, there's a few scenarios. It's more about, stability of your cash flow. If you worry about, your repayment obligation, then it's best to allocate some of your loan to a longer term. The scenario including, you probably expect a newborn and your partner will stay home, stop working for a few months or up to 12 months, and therefore your income will be less, but outgoing will be more. So that would be quite common scenario. Or you're looking about changing job, especially from employed to self-employed. Your income probably not as much as, before in the first few months. So certainty is more important. Or maybe you are investor, you have a large loans, and as investor, we are running marathon. We want to make sure over the next few years, you can repay your loan on time, no issues. Even when the interest rate rise, you can still cover any shortfall. So make sure that you have that kind of certainty over your cash flow. So if you have a big loan, split them across different banks and let them come off at different time of the year, so that help you have that stress free. Okay, so that's about it. What else? Okay, if your current interest rate is quite high and you're thinking, I'm still have over a year to come off that fixed term, should I break or not? Well, to be honest, we have worked a few scenarios, and normally the break fee, it probably work out very similar to if you finish the fixed term. The difference is less than $100. So probably, not much difference. But if you have been with your current bank for over 3 years, maybe we can consider a refinancing scenario. So the cashback would cover that break fee, or, more than the break fee. But, making a decision to refinance is, you can't just consider the rates aspect, because you may potentially lose some of the features from the current lender or relationship, whatever it is. So you need to take into account the big picture. Best way would be engage a professional mortgage broker and let them to help you navigate all the options. Also, if you are property investors, your interest rates, especially if you bank with BNZ, you will notice your rate won't be as good as owner-occupied. So they probably have about 0.25 to 0.3% higher than the owner-occupied rates. So just be in mind. And it's really hard to negotiate any discount. That's just how BNZ price the investment loan. So just be in mind, it's not they don't like you, just the way it works at the moment. Now, economists expect there will be a cut in Feb, but also the bank is, still kind of working with the Reserve Bank to see if, the capital would increase. If it goes ahead, that means the bank has to hold more capital and put that money aside in case there's an economic downturn, which means the costs are going to go up. So, what that means to us, it potentially, won't pass any cut to the borrowers, or they may even increase the interest rate. So, just be aware that's possible. That's the other side of the equation. Okay, that's enough for today. That's for November interest rate update. Please, follow us on YouTube, because we will have really regular update for any new policies or any interest rate change or any case study that we thought might be useful to share with you so that you can learn from it. Thank you for watching. I will see you next time. Bye-bye.